And I think you have to kind of take a step back and see what the biggest players in the world are doing. And the biggest players are the central banks who are massively de-dollarizing and buying commodities. And I think that's kind of the thrust. That fits hand in glove with Zoltan Pozsar said. We are heading into a new era based on commodities and transparency, not opaque debt instruments and promises that seem to fall short. And I just think that this is something that will be a very, very...
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
Imagine a world where the shimmer of silver isn't just for jewelry or coins, but a beacon of the financial revolution. Today, we're peering into a future that might seem as distant as the stars in the sky. But according to Andy Schectman and Rafi Farber, it's a future that's rushing towards us with the speed of a comet. Picture this: silver, a precious metal that currently sits comfortably at $22.62, is on the brink of not just rising, not just soaring, but absolutely skyrocketing to an almost mythical price of $2,598. Yes, you heard it right, $2,598. Now, I know what you're thinking. How is such a staggering leap even possible? What cosmic forces could drive silver, a metal we've known and used for centuries, to reach such an unprecedented value? Stay with us as we unravel this enigma. And remember, you might just be witnessing the prelude to one of the most extraordinary financial events of our time. In this whirlwind of a financial landscape, where numbers dance and markets ebb and flow with the rhythm of global events, silver has subtly yet assertively made its presence felt. Just when you thought it was another day in the market, silver prices, almost like a stealthy cat, nudged up by 0.50%. But why? The answer isn't straightforward, and that's the beauty of it. It's a tapestry woven with threads of mixed signals from U.S. housing and job data, whispers of a softer USD, and the robust performance of Wall Street that's painting a picture not many can ignore. Now, let's take a step closer and dissect these market nuances. The U.S. economic data, often a compass for market sentiments, has been playing a symphony with highs and lows. On one hand, you have the jobless claim singing a tune of strength, and on the other, the housing data hums a mixed melody. But here's where it gets intriguing. Amidst this financial orchestra, silver prices are dancing to a different beat. The market's risk sentiment, almost like a weather vane, is swaying with the winds of geopolitical concerns. The Middle East, a region where history is often written in the sands, is once again at the heart of global attention, with the Israel-Hamas tensions brewing a storm that could reach the shores of the financial markets. In this session where numbers and currencies exchange secret handshakes, the XAG/USD has found its rhythm at $22.62 after a graceful dip to $22.43. It's not just about the numbers, though. It's about the story behind them. The geopolitical chessboard, with its kings and pawns, the economic indicators that serve as the market's pulse, and the subtle yet significant influence of the US dollar. In this narrative, every player, every move counts, in silver, with its lustrous allure, is proving to be a protagonist worth watching. Don't go anywhere, because this story is just unfolding, and trust me, you wouldn't want to miss what comes next. Remember, subscribing to our channel ensures you're always in the loop, privy to insights that could very well redefine how you see this shimmering metal. Let's ponder over this. In the grand chessboard of global finance, what role does silver play, and how could it redefine wealth as we know it?
And, one of these things that I would call maybe the greatest calculated speculation I've ever seen, I think it's the trade of a generation. I don't say that lightly. I will be the first to admit I'm surprised it has stayed here where it has. But to what Rick had said, what Rick was saying was that gold in the previous four bull cycles led the way. Well, that's exactly what gold is doing here. And what he would also say is that when silver finally caught up in terms of a percentage gain, it catches it and actually surpasses it in terms of its performance. And when you look at silver from every single metric, aside from the fact that it holds the largest concentrated short position on any commodity traded on the exchange, which just reeks of manipulation. It is an asset that is increasing exponentially in its demand in green, in digital, and military applications, not to mention monetary, and it is decreasing in its above ground footprint. It's also decreasing in its below ground footprint in the respect that what it is used in industrial applications or military applications, it is used and it is gone. It is, in terms of recycling, very little silver is recycled because it's used in such small amounts in motherboards or in cell phones or basically anything that conducts electricity or is electronic has a little bit of silver in it. Doesn't make sense to recycle it out. Or if it's used in the tip of a Tomahawk cruise missile, you're not going to dig amongst a crater where the bomb went off looking for residues, silver residue. My point is that it is decreasing above ground in its industrial and military applications, and it's decreasing below ground in the respect that for 5,000 years, the ratio of 16 ounces of silver to 1 ounce of gold not only was consistent in its price, but it got that price ratio because of
well, functionally right now it is not a monetary metal. I'm not arguing that people actually use silver as money. But the analogy that I use is, and I have this on my Substack in an article called The Myth of Silver Demonetization. Imagine you're on an airplane. How they train astronauts in a zero-G environment, right? They put them in airplanes and then they nosedive the airplane or make it go down really fast at a sharp angle, and then it's like zero G in the airplane. But why is that? Because everything's falling just as fast as you are. So is there gravity on the airplane? Yeah. Does it feel like there's gravity in the airplane? No. So does silver feel like it's a money? No. But is it actually money? Yeah, it still is. And there is proof of this. Because 3 times since silver was demonetized in 1873, 3 times since then it has returned to the original bimetallic ratio with gold, which was 15.5 to 1, something between 15 and 16 to 1 historically. I don't remember the exact number, but 3 times it's happened, right? In 1919, post World War I, it happened in 1968 when the London gold pool fell apart, and it happened in 1980 when there was a dollar panic. So that means that 15 to 1 ratio means that the public is returning to silver as money. And why would that be? Well, there's really no need for silver when you have a functioning gold derivative. Let's say that we had the perfectly honest Federal Reserve or whoever to manage the dollar, and they printed it one to one at a constant ratio with the gold that was mined, and everything was 100% honest and perfect, right? So then there would be no need for silver as a monetary metal at all. You could just use the dollar derivative, the gold derivative. But when the people start to suspect or understand, that the gold derivative is not honest anymore, then yeah, they will buy gold, and they will also buy silver, because if a gold derivative doesn't work, you're gonna need silver for retail purchases because gold coins won't work. And I'm not saying that it's like the average grocery shopper, retail level grocery shopper says, oh, well, I have to buy silver now. This happens in the plumbing, in the deeper recesses through the Fed's balance sheet. But basically what I'm saying is that whenever there is a dollar panic, and because the dollar is explicitly a gold derivative now, even though statutorily it's not, but functionally it is because of the regression principle, and if you've heard me speak about that before, you understand, then once the trust in gold goes, the rush to silver begins. We've seen it 3 times. We'll see it again. Exactly when, we don't know. But the point is, what's the endgame ratio? The endgame ratio is the 15 to 1 gold to silver ratio. That is a monetary panic. No matter what the dollar numbers for these metals are, once they're 15 to 1, that's the bell. That's when you got to
Enter the visionaries of this tale, Andy Schechtman and Rafi Farber, akin to modern-day financial oracles, who have peered into the silver market's soul and emerged with a prediction that's sending shockwaves across the financial realm. They aren't just any market commentators. These are seasoned maestros whose words carry the weight of profound knowledge and experience. When they speak, the market listens, and this time, they've not just spoken, they've roared with a forecast that's as bold as it is bewildering. Picture this: Our modestly priced silver, the silent yet steady player in the market, is not just expected to rise or even double. No, Shechtman and Farberg have painted a future where silver transcends common market trends and erupts into a financial spectacle, targeting a price of $2,598. The disparity between its current price and the forecast is not just a gap. It's a chasm that beckons a myriad of questions. How could silver, traditionally seen as gold's understated sibling, catapult to such a valuation? In this narrative, it's not just the prediction that captivates the audience. It's the credibility and the historical acumen of the predictors that add depth to this plot. As we stand at the crossroads of incredulity and curiosity, we're compelled to dive deeper, to understand the undercurrents that might fuel such a monumental rise. This isn't just a prediction. It's a storyline that challenges the norms, invites speculation, and demands attention. And while you're absorbing the gravity of this forecast, let's not forget to engage in this journey together. If you haven't already, make sure to subscribe to our channel for real-time updates and deep dives into predictions that have the power to reshape not just portfolios, but perspectives. Before we move further into the depths of this prediction, ponder this. What shifts in the global economic tides would be required to turn this bold prediction into a resounding reality? As we delve deeper into this fascinating narrative, it's crucial to understand the stage upon which this drama unfolds. The technical charts, often the canvas of financial artists, sketch a picture that's both intriguing and complex. Silver's daily chart paints a story of neutrality with a slight downward bias, a narrative brought to life by the formation known as the death cross. This ominous-sounding pattern occurs when the 50-day moving average coyly slips below the 200-day moving average, a signal that often whispers tales of potential declines. But here's where our tale takes a twist. In the midst of this technical gloom, the prediction by Shechtman and Farber shines like a beacon of bullish defiance. The contrast couldn't be starker, and it's this juxtaposition that adds layers of suspense and intrigue to our story. The market, a grand stage for economic actors, is also swayed by sentiments and speculations. Geopolitical tensions, particularly in the powder keg region of the Middle East, weave their own subplot into this narrative, adding a layer of complexity and uncertainty. In the realm of economics, sentiment can often overshadow statistics. The whispers of rate cuts by the Federal Reserve, murmured during casual yet consequential conversations, add a flavor of anticipation to the mix. The market sentiment, now a cocktail of cautious optimism and wary speculation, sets a stage where anything seems possible, where silver's current dance at $22.62 could be just a prelude to an unprecedented ballet of numbers. As we stand amidst this confluence of technical signals and market sentiments, it's essential to keep our minds open and our insights sharp. Remember, the market is a living, breathing entity, influenced by a myriad of factors that range from cold, hard data to the warm whispers of geopolitical whispers. And so, as you reflect on this intriguing blend of technical analysis and market sentiment, consider this. In a world where markets are narratives and prices are protagonists, what role does sentiment play in shaping the destiny of assets like silver? Join the conversation, subscribe to stay informed, and remember, the next chapter of this saga might just redefine the very essence of market dynamics.
BRICS Bank is going to release their first swath of bonds. They're called the Maharaja bonds, and they're being made available for governments, financial institutions, and regular investors. But interestingly enough, the BRICS bonds will be available for purchases in local currencies only, not the US dollar. So again, I think what we are witnessing with the dollar hegemony is death by 1,000 cuts. And too many people, again, going back to the nothing burger comments, where instant gratification is not fast enough for these people. You have to understand that if there is one model that I respect more than any from these BRICS nations, is the fact that they do things methodically. They are doing things in a way that once they rise to challenge the West to whatever degree they do, you can bet that they've dotted their I's and crossed their T's. Another 30 countries have formally applied to the BRICS. and we don't know exactly what they are. I mean, I have a good idea what they are. There's a list of them that came out. We believe it's accurate, but rather than speculating, we'll just simply say that this is a growing trend. And whether all of the settlement being done in local currencies, whether we see more and more countries signing up, or whether we see a new set of $28 billion worth of BRICS bonds that are being issued only in local currencies, little by little by little by little by little by little, and bang, all at once. Now, where is the bang? Don't know. Is it going to be this year? Don't know. I mean, you got Iran and Russia have officially abandoned the SWIFT payment system. And that's something to consider, is that, look, these are two of the BRICS members that are being sanctioned by the West. And when you have the Speaker of the House and basically the entire Senate that are saying, yeah, we're and the Biden administration behind a bill to not only sanction these assets like we did Iran, and you notice we're giving those assets back to them. That created a lot of pushback by the media, of course, and by the right side. But what they're talking about is actually confiscating the money that they've sanctioned or that they have frozen on behalf of the Russian regime, and using it to fund the battle in the Ukraine, because Congress doesn't want to give up any more appropriations, and perhaps rightfully so with all the money that we've spent. And I would simply just say to you that this is a situation where you're going to see more of these countries, especially if we end up confiscating Russia's funds, that are going to go to whatever length they can to circumvent the SWIFT system, the Achilles heel, if you will, or the pathway that the West chooses to inflict sanctions and punishment upon the rest of the world. It's happening, and it's the dumbest thing we could have ever done. Let that genie out of the bottle.
Now, let's venture into the heart of this enthralling saga, building the case for silver's meteoric rise to $2,598. This isn't just about numbers soaring on a chart. It's about understanding the profound shifts and the confluence of factors that could converge to propel silver into a new financial stratosphere. We're not merely spectators in this tale. We're actively piecing together a mosaic of possibilities, each tile representing a potential catalyst in this unprecedented journey. Firstly, let's consider the global geopolitical landscape, a chessboard where nations are players, and every move could send ripples across financial markets. The tensions in the Middle East, particularly the ongoing conflict between Israel and Hamas, aren't just headlines, they're potent variables that could significantly impact market sentiments, especially in commodities like silver, often seen as safe havens during times of turmoil. Next, turn your gaze towards the macroeconomic horizon. The whispers of rate cuts by the Federal Reserve, if materialized, could dramatically alter the value of the US dollar, thereby impacting silver prices. Remember, in the intricate ballet of currencies and commodities, each step, each pirouette, can lead to substantial shifts in valuation. And then, there's the silent yet powerful force of market sentiment, a tidal wave of perceptions, expectations, and speculations that can lift assets to soaring heights or plunge them in the depths. The prediction by Sheckman and Farber, while startling, could also serve as a beacon, attracting investors, traders, and speculators, all potentially contributing to a self-fulfilling prophecy that propels silver to the realms of their bold forecast. As you absorb the gravity of these factors, remember, the market is a tapestry woven with the threads of data, sentiment, and speculation. And in this complex weave, each thread, each color, contributes to the grand picture that's constantly evolving. Before we unveil the climax of this financial odyssey, let's take a moment to remind you, if you haven't already, subscribe to our channel for insights, analysis, and the unfolding story of silver's potential journey to $2,598. Reflect on this. In the intricate tapestry of global markets, what strand could be the key in turning this bold prediction into a vivid reality? Stay tuned, as we're about to draw the curtains on this saga, unraveling how all these factors could converge to bring to life the astonishing prediction of silver reaching $2,598. And now, we arrive at the apex, the crescendo of our narrative, where we attempt to weave together the myriad threads of this complex tale to understand how silver, this unassuming yet dignified metal, could potentially ascend to the staggering heights of $2,598. It's here, in this final act, that we must consider the confluence of every factor we discussed. The geopolitical chess game, where tensions and alliances shape market sentiments. The intricate dance of economic indicators like jobless claims and housing data. And the looming presence of macroeconomic policies, particularly those of the Federal Reserve. Each of these elements doesn't just exist in isolation. They interact, they intertwine, creating a dynamic, ever-evolving landscape where the improbable can become possible. The bold prediction by Andy Schectman and Rafi Farber, while rooted in profound market understanding and a keen sense of economic dynamics, also challenges us to think beyond the conventional, to entertain the notion that in the world of finance, the only constant is change. Their forecast isn't just a number. It's a narrative, a hypothesis that invites scrutiny, analysis, and even skepticism. But as we ponder this potential future, let's not forget the role of sentiment, the human element in the financial equation. The market, in many ways, is a reflection of collective perceptions, fears, hopes, and expectations. The very notion of silver reaching $2,598 could catalyze discussions, influence decisions, and perhaps even alter the course of market trends. In the end, while the journey to $2,598 might seem steeped in uncertainty, it's also a testament to the market's inherent dynamism, its ability to surprise, to defy expectations, and to reflect not just economic realities, but the very essence of human sentiment and speculation. As we conclude this exploration, let's remember, while the prediction of silver reaching $2,598 is indeed bold and speculative, it's also a reminder of the market's unpredictable nature, a narrative that's constantly being rewritten by a confluence of factors, both seen and unseen. Thank you for joining us on this intriguing journey through the twists and turns of market analysis and speculation. Don't forget to subscribe to our channel for more insights, analyses, and updates on this and many other financial stories. And as always, remember, this is not financial or investment advice, but a journey through the complex and fascinating world of market predictions and trends. Stay informed, stay curious, and let's continue to navigate the ever-changing tides of the financial markets together.